Welcome back. You tune in to Market Fatafat, where we are taking you through all the stocks that are in focus today, either on the back of news flow or on the back of technicals. So let's get started with all the stocks that are in focus today. We spoke about how TCS and other stocks are in focus, but let's go on to some other stocks. Irida is another name that is in focus today. In fact, it has given up all its morning gains. It is right now trading at the day's lowest point. Now, a decent set of numbers coming in for Irida. In fact, the quarter 2 net profit grew 36% on a year-on-year basis. It was up at 388 crores compared to 285 crores on a year-on-year basis. However, on sequential basis, the net profit increased only 1%. Now, the net interest income, or the NII for Irida, increased by 51% as compared to last year on a year-on-year basis, and the revenue from operations increased 38.5% as compared to the previous year. But to set up a subsidiary for the retail business is also something that Irida has come out with a news flow that they have announced, having received the approval from DIPAM and from the administrative ministry for setting up a wholly owned subsidiary for the retail business, such as the PM Kusum solar rooftop and other B2B segments in the RE and the emerging RE sector, including EVs, energy storage, green technologies, sustainability and energy efficiency. On the back of that, Irida is in focus today.
Okay, so two news flows coming in for Irida earnings as well as this solar scheme. But let's move on then and talk about Exide as the next stock. And this stock is also holding up pretty well for itself in today's trade. And Exide Limited has in fact announced a new 100 crore rupee infusion in its wholly owned subsidiary. Well, it's 99.9 crore to be precise, but rounding it off comes to 100 crore for its wholly owned subsidiary Exide Energy Solutions Limited. And this is aimed at accelerating the construction of a greenfield facility in Bengaluru. Now, this plant will focus on the manufacturing and sale of lithium-ion battery cells, modules and packs, catering to India's rapidly expanding EV and stationary energy storage markets. And this investment, raised through a rights issue, takes Exide's total investment in this subsidiary to 2,852 crore rupees. And the fresh infusion marks the second consecutive 100 crore rupee investment in recent months, demonstrating Exide's strategic focus on positioning itself as a key player in the EV ecosystem. So very positive news coming in for the company on the back of this investment that they've made in their battery subsidiary, and the stock is up 3.2% as we speak.
Alright, another stock that is in focus today is Cummins India. In fact, downgrade coming in from a brokerage by Goldman Sachs, and the stock was blown out almost 4% in morning trade. It has recovered from the lows, but nonetheless in the trading in the red. Tell us what does the note say, Janai?
Well, definitely Cummins India is in focus. Currently trading with the cuts of over 5%. It's the top FNO loser. We have a note by Goldman Sachs who have downgraded to sell rating with a target price of 2,900. Now, what they believe that the company has meaningfully outperformed the broader markets due to rise of data center opportunity and strong domestic industrial demand. However, there are some concerns lying on the horizon. The first one is a CPCB4 transition, which has made diesel gensets cost higher than 15 to 25%. Also, they're expecting incremental market share gains to be at an expense of profitability for the company. They're expecting the BESS and other alternatives to reduce the overall diesel gensets demand, and they expect a weak macro environment which will keep the export growth lower than the previous cycle. On the back of this, Cummins India is in focus, currently trading with the cuts of over 5%.
Okay, on that note, we'll slip into a very short break on this edition of Market Fatafat. We'll be right back to talk about more stocks that are garnering all the attention in today's trade.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the buzzers in trade today. And one of the buzzers is Anand Rathi Wealth. In fact, the stock was up almost 5% following the quarter 2 results. They have announced a 32.4% year-on-year rise in the net profit to 76 crore rupees for the quarter ended September. And the company's revenue from operations grew 32% on a year-on-year basis to 242 crore rupees compared to 182 crores in the same period last year. And the company has recorded a 70% surge year-on-year on a year-on-year basis in the mutual fund distribution revenue, that is amounting to 195 crore rupees, and witnessed a 128% increase in the net inflow at 5,700 crore rupees on the back of good set of results coming in for Anand Rathi. Currently, it has given up all those gains, morning gains. In fact, it is trading at the day's lowest point. Just marginally in the green, trading with gains of 0.03%. Nonetheless, Anand Rathi Wealth was in focus, trading with gains of 5% in the morning's trade.
Okay, well, so Anand Rathi not doing much as of now, completely flat. But let's talk about a stock that's actually soaring away. And last I checked, it was also locked in upper circuit of 5%. And the one that I'm talking about right now is Wockhardt. Now, this is on the back of the reports of the progress of a pneumonia drug by the company, and upper circuit right now as well, 5%. The drug in question that we're talking about is nifithromycin, which is WCK4873 in Wockhardt parlance. Now, earlier in an exchange filing on the 7th of this month, the company said that its unique outpatient treatment advantage was granted fast-track designation by the US FDA, and they have also successfully completed the phase 1 study conducted by the National Institute of Health in the US on the same. So positive news flow coming in. Reports have been circulating that this drug is, this pneumonia drug in fact has been doing really well, and on the anticipation of what this drug could do for the company in terms of financials, the stock is doing pretty well today. The buyer sentiment looking strong, stock up 5%.
All right, moving on to the Pune edition of ET Now on the go. We caught up with Amitabh Saha, who's the co-founder and CEO of Express Bees. What are the biggest trends that he sees emerging in the logistics space, and what does the company's growth roadmap really look like? Let's listen in now to this slice of that conversation.
E-commerce was a huge impetus for logistics industry, and e-commerce brought in a lot of technology, and e-commerce logistics itself evolved as an industry within logistics industry. And right now we have people talking of quick commerce. So I think one of the facts has been, like, the technology has made logistics more efficient. Another aspect of technology is always the deflationary effect it has on the deflationary effects it has on the services. For example, we haven't seen the airlines prices, ticket prices, except the one-odd cases, shooting up in the last few years. The prices of the tickets have remained stable. Similarly, I think technology has played a big role in reducing the cost of logistics. Today, one can pick up a shipment from anywhere in India and deliver to anywhere in India for less than $100, which was unthinkable around 10 years back. So it, first of all, logistics became efficient. Now logistics is becoming quicker, and I'm sure going ahead it would be like logistics. With more and more things being delivered to your home, I think logistics would end up becoming one of the leading employment generators in the country.
Well, one thing we keep on hearing about is quick commerce nowadays. It's impacting lives, it's delivering fast, it's doing a lot of stuff for Gen Z, in fact. How do you see this particular e-commerce, quick commerce, in fact, coming up? How do you see it's changing your industry? How prepared are you for this? Is it going to be a large-scale disruptor for your industry, or it's going to be one of the trends?
I think industry is going to be disrupted, but there'll be an evolution. When e-commerce came in the beginning, people thought like e-commerce was just a disruptor, but now it has become a way of life. I think similar thing will be about quick commerce. So in my opinion, today the difference between e-commerce and the quick commerce is, I would put it in simple terms, I would say quick commerce is like a kirana store where you get a select merchandise replenished fast, and an e-commerce site is like a super or a hyperstore, or more than a hyperstore, multiple hyperstores pulled in together. So what the change in lifestyle is going to be, customer is going to expect things faster. So there will be items which would be delivered to you in half an hour. There will be items which will be delivered to you in few hours. And there's also a constraint about how much goods you can store where, and because there's a constraint on working capital. Ideally, you might want to keep your goods at a lot of places, but that consumes a lot of working capital, which is a constraint for the business. So what will happen is you will have, at a city level, major metro city level, you will have large hyper warehouses. In city, you will have at maybe 4 or 5 warehouses which will allow an hour-long delivery for a slighter. So you'll have a Kirana type delivery from a local pod, which will be 10 to 15 minutes. You, at a city level, certain items will be available to you in 2 to 3 hours. Rest of the stuff would be available to you same day or next day, depending on the time of the day you order. And at a 300-kilometer radius from the large cities, from those hyper warehouses, you will be delivering at a much larger audience across India.
And let's talk a bit about the cross-border logistics. How are you managing it? And at the same, when wars are happening in certain parts of the world, is it disrupting your business when it comes to cross-border logistics?
So cross-border logistics is a very small part of the business that we do currently of our total business. Yeah, there are disruptions. And normally the disruptions are economic in nature. The prices of your container goes up, and container prices go up, fuel prices go up. Those are some of the things. COVID, for example, sent the prices of cross-border logistics through the roof, and so those are disruptions which happen, which affects the supply chain.
Okay, and let's talk about the last few things, which are, what are the new trends emerging in your sector? What are the latest things you're keeping a tab on or keeping the eyes open for, which can be good for you and which you can really look at for expanding your business?
So new things always emerge in consumer trends. For example, quick commerce is something new. Use of data is new. What I think the way logistics itself has changed. A couple of years back, logistics companies primarily used to send envelopes and documents. Now, with the advent of WhatsApp, you were unless you were sending an original document, you were essentially sending an image. Now, a lot of images are electronically transferred. Similarly, a lot of procedures, governmental or banking procedures on banks and governments was the biggest, or government procedure related transfers were the biggest source of logistics. Now those are all gone because we have gone into, things have been digitized,